Okay. So today, inshallah, we're gonna take chapter 4. And in chapter 4, we're gonna talk about the options for organizing business. What are the forms of structuring a business? Okay. So here we have the learning objectives or the learning outcomes of our session today, inshallah. By the end of this session, inshallah, you will be able to define what we mean by sole proprietorship and to know more about the advantage and disadvantage of this type of structuring a business. You will be able also to identify two types of partnership. We have two types of partnership: general partnership and limited partnership. So we're going to have a look on these two types of partnership and evaluate its advantage and disadvantage. You're going to be able, inshallah, also to describe the corporate form of organization. What is its advantage and disadvantage of the corporation form of organization. Now, as you can see here in the introduction, we have a figure here that represents the different type of forming businesses. We have three main types of forming businesses, which are sole proprietorships and corporation and partnership. Okay, so as you can see here, we have almost 71% of the businesses are represent represent the sole proprietorships, and 23 of the businesses is a partnership, and almost 5% represent the corporations. So the majority of the businesses now, this figure represents the businesses in USA, but also in other countries, the majority of businesses are sole proprietorship businesses. Okay. Now here we have a table that shows us the different structure or the different forms of organizations and differentiation between these forms of organizations in terms of the ownership, taxation, liability, and use. This table is a summary. I would consider this table as a summary of the whole chapter. So I'm going to skip the table now and come back to the table at the end of our session, inshallah. Okay. Now, first of all, sole proprietorships. What we mean by sole proprietorship, or what is the definition of sole proprietorships? Sole proprietorships, businesses owned and operated by only one, and it is the most common form of businesses organization in the United States and also in other countries as well. Many of these businesses who are forming or structuring as a sole proprietorships, many of these businesses focuses on service rather than manufacturing, because manufacturing, most of the manufacturing businesses are called corporation, not sole proprietorships. It is typically employ fewer than 50 people. So we don't have much employee in sole proprietorship. It is comprises, as we saw in the figure before, it comprises nearly 3/4 of all USA companies, and also it represents the majority of the economy in USA. Usually, women business owners less likely to get access to credit, because men are usually more likely to start their businesses comparing to women. Now, who can give me an example of sole proprietorships or businesses? We call it or name it sole proprietorships. Most of the businesses today, we see it, most of them are sole proprietorships. Any idea? If you want to start your business as an individual, if you want to start your business from scratch, you are a sole proprietors. Okay, most of the small retailers, retail stores are sole proprietors. Most of the private clinic barber, restaurant, food, any small shops that we see in the country, most of these businesses are called sole proprietorships. You got it now?
Doctor, like
Yeah.
Haraj?
Yeah, like Haraj.
Okay.
Now it depends. Haraj, who's the owner of Haraj? If the owner is one individual, it is a sole proprietorship. But if the owners are more than one, maybe 2 or 3, and they are partners in the business, so we call this partnership business. It's structured as partnership. Okay. Now, what is that? Yeah.
Like mini market?
Like mini market. If you want to open a small store for grocery, this is a sole one. You are the only owner. You don't have any partner in the business. So this is a sole proprietorship, and you are sole proprietors. Okay. What is the advantage of sole proprietorships? First of all, it is easy to start with. If you want to visit, because it doesn't cost you a lot. It is all it's all only involve you as an owner and a small amount of capital to start the business. Okay, easy to start and cost of formation. It allows a high level of secrecy. All the secrets of your business are kept safe because you don't have any co-owners. Okay. Owners keeps all the profit. You don't share the profit with any partners. So all the profit of your business eventually comes to you. Flexibility and control of all the business. You have the flexibility. The decision-making process in sole proprietorships are only limited to you. Okay, don't have much people or many partners to share to make decision with. Okay. Flexibility and control of the business. You are the only one who own the business. Government regulation is minimal in terms of any regulation. Most of the regulation of the government, they are most related to the big companies like corporation, okay, or other companies that employ more than 50 employees or more than 100 employees, okay. Taxes paid only once, because you are taxes here, we are talking about personal income. You are taxed. Sorry, yeah.
Sorry, Doctor. For the tax, I'm paid only once. I think that's not applicable for KSA.
Yeah, this is not applicable here because we don't have personal income taxes law here in Saudi Arabia, but it's applicable, for example, in USA. Okay. It can be dissolved easily if you want to. If you decide to close the business, it easily because you are the only owner. You don't have other partners with you. Okay, this is the advantage. What about the disadvantage of sole proprietorships? We have many disadvantages. First of all, unlimited liability. What we mean by unlimited liability? The responsibility of any financial aspect of the business is on you as the owner. So you have unlimited liability. Your personal assets are not protected from liability because your business asset is not separated from your personal assets. We look at the business and you as an owner as a one entity here. Okay, so you have unlimited liability. For example, if your business cannot fulfill the obligation, the financial obligation, and for example can't pay for the creditors or suppliers, you have to pay from your personal assets. Sometimes you had to sell your house or your car just to fulfill the demands, the financial demands of your business. Okay. Another disadvantage, which is scarce external funding. There is a scarce, limited fund. You can't rely on many options to get funds for your business. You have only, for example, your family, your friends, sometimes the bank to get funds for your business. Owners need diverse skills. As you, the owner of the business, you need to have more skills to manage this business. For example, you need to have management skills. You need to have some marketing skills to market your business, to do the marketing obligation in your business. You need to have some financial skills to take care of the financial aspect in your business. Okay. Another disadvantage, success is tied to the owner. What we mean here by success is tied or subject to the owner. It is related to the owner of the business, related to his ability to continue working in the business or stop working in the business. Okay, so your business won't succeed if you, for example, decided to close the business, if you decided not to work anymore with your business or not to continue working in your business. Another disadvantage, which is lack of qualified employees. As a small business or a sole proprietors, you are competing in terms of finding the skilled employee for your business, because you are competing with the big companies. You can't provide for the employee, you can't provide them with the big incentives or big salaries compared to the other companies, the big companies. So it's hard for some small businesses to find the qualified employees. Higher taxation rate. Now, we said before here, we said taxes paid only once, which is as a personal income. But sometimes if your business is quite successful, then the tax would be higher because it's considered as a personal income, and the taxes would be higher. You have to pay all the taxes required for your business as an income, because you don't have partners or many partners that you can distribute the taxes between them. Okay. Now, finding talented employees. As we said before, for sole proprietorships, it is difficult for them. They have greater difficulties in terms of attracting talented employees. Why is that? Because the competition comes from the larger companies. You can't compete in terms of attracting those employees or those skilled or talented employees to your company. Large corporations such as McDonald's have better profit and more job opportunities than other sole proprietors. Difficult to match the wages and benefit offered by large corporation with those offered by the sole proprietors. Okay. And there is little chance for advancement within the sole proprietorships. Most of the employees, they want to work for a big companies, the corporations, because of the job opportunities and prosperation for advancement in the job. They won't see that. We don't see that in the sole proprietors or sole proprietorships. Okay. Now I'm going to show you a small, very short video about sole proprietorship.
The legal structure for your business depends. This video will help you identify whether or not it makes sense to do business as a sole proprietor. As always, it's smart to consult a lawyer who specializes in business entity formation if you have questions or need further guidance. Let's get the most obvious question out of the way. What is sole proprietorship? There are several different business structures or entities that you could choose from for a business. Sole proprietorship is one of them. Other common business structures include partnerships, limited partnerships, C corporations, S corporations, and LLCs, and there are others that vary from state to state. If you haven't paid a fee, filled out a bunch of paperwork, and filed it with a state for one of the other entity types, you are doing business as a sole proprietor. What this means is that you and your business are the same legal entity, and you're probably filing all income and expenses related to the business on your own personal tax return, rather than filing a separate return for the business. Which leads me to the advantages of sole proprietorship. It's super convenient. There's very little paperwork, if any, that you have to file to get started. Of course, you should check your local business office for specific requirements, as they do vary from state to state, particularly as they relate to collecting sales tax. As I mentioned before, income tax filing is a lot simpler as a sole proprietor than if your business entity is separate from you as an individual. Or at least you'll only need to file one tax return rather than one for you, plus one for the business. And as a sole proprietor, you have complete control over the business, unlike other entity structures where you may have governance requirements, such as having a board of directors or shareholders to worry about. But there are some significant disadvantages of sole proprietorship as well. You can't really go into business with another person as a sole proprietor. To do that, you'll need to look into another business structure, such as a partnership, a corporation, or an LLC. And as a sole proprietor, you are personally responsible for everything the business does. So if, say, the business racks up some serious debt or gets into legal trouble, that debt or that legal trouble is yours. Your personal assets, including your house, your rainy day funds, are potentially at risk, even if you didn't have anything to do with the mistake. In other words, when you're a sole proprietor, if someone else, such as your employee, does something outrageous while working for your business, you can be held responsible. And you'll have fewer fundraising options because while you can sell shares of a business, you can't really sell shares of yourself in order to raise capital for a sole proprietorship. If the following statements sound like you, then sole proprietorship might be a good fit. You want to get started right away. You value things like convenience and simplicity when it comes to filing taxes. You're not planning to partner closely with anyone else in business other than perhaps hiring employees. And you're not really worried about being personally liable for any business debt or legal action. But sole proprietorship is probably not the best fit for you if you have personal assets that you'd like to protect from the business's activities, or if you want to try and take advantage of better tax rates like certain company tax rates, or if you want to go into business with one or more partners, or if you intend to sell stock in order to raise money for the business. In any of these cases, you'll probably want to consider one of the other business entity types. Thanks for watching, and be sure to check out our other small business guides.
Clear? Guys, clear?
Yes, doctor.
Yeah, sure.
Yes, doctor. Yes.
Now remind me, what are the three types of forming organization or structuring organization or businesses? The first one is what?
The sole proprietorship.
Yeah.
Proprietorship.
Yeah.
The C corporation. And
We don't say, for example, C corporations or S corporation, because even this classification of corporation as C or S is related to USA. But we mainly are concerned with three main types of forming organization or forming businesses, which are sole proprietorship, and partnership,
and limited partnership.
Not limited partnership, the corporation. We're gonna know the difference now, inshallah. Now, the second type of forming organization or forming businesses, as we said before, is partnership. What do we mean by partnership? What is, if you know, what is the definition of partnership?
It's an organization which owned by more than an owner.
More than one owner. It might be just two owners, or it might be, for example, a group of owners. So partnership. So
It could be two or more.
yeah, two or more. If it's one, it is sole proprietorship. Okay. Can you see the slide now?
Yeah.
Okay.
Yes.
So partnerships. If we want to define partnerships, what we mean by partnership is a form of business organization defined by the Uniform Partnership Act in USA as the association of two or more persons who carry on as co-owners of the business, okay? And they are targeting profit. Partnerships also can be considered as a way to minimize any disadvantage of the sole proprietorship and maximizing advantage of other businesses. As we have, for example, here in partnership, we have more than one owner. So, for example, the taxation, the taxes can be distributed to more than one owner, two or three owners, okay? Partnership organizations are larger than sole proprietorships in terms of the number of employees employed in the company or in the organization, the partnership organization, but smaller than comparing to corporations, for example. Okay, so partnerships comes in the middle in terms of the number of employees between the sole proprietorship and the corporation. Got it? Now, what are the types of partnership? We have two types of partnership here. We have general partnership, we have limited partnership. What we mean by general partnership? General partnership involves complete sharing in both management and liability of the business. Okay? If we have, for example, three partners, all the three partners sharing the management and sharing the liability of the business. Okay? Limited partnership here means we have at least one general partner who carry on the unlimited liability, who is responsible, who is responsible and liable for the business. Okay, and we have also at least one limited partner whose liability is limited to his or her investment in the business. Okay, unlike the general partnership and limited partnership, we don't share the management. They don't share management over partners. Okay, but they share the profit according to the investment of the partners. Got it? And we have something called articles of partnership. What is the articles of partnership? Mainly, it is the legal documents that set forth the basic agreement between partners. Basically, it is a list of money and assets that each partner has contributed in the organization or in the partnership organization, and sometimes we call it partnership capital, okay, which state each partners in terms of his role in the business and how the profit will be distributed among the partners, and what is the leaving condition if one of the partners, for example, decided to leave the partnership or the company or the business. Okay, got it? So we have two types of partnership: general partnership and limited partnership. And if I ask you, what are the types or the forms that we use it in forming business, we have only three, which is sole proprietorships, partnership, and corporation. Got it?
Yeah. Doctor, I just have a question about the articles partnership.
Yes.
Does that belong to limited? Because I believe it's also a limited but in legal way.
Yeah, it belongs to the limited, and also in the even for the general partnership, they have articles of partnership between them.
Yeah.
Just to protect their rights in the business. Okay.
Yeah.
Now, what is the advantage of partnership and disadvantage of partnership? First, we're going to go with the advantage of partnership. What is the advantage of partnership? First of all, easy to organize, especially if we have, for example, a small number of partners. If you have a small number of owners, you have to, for example, 2 or 3 maximum number of partners. Availability of capital and credit is much greater than sole proprietorship, because in sole proprietorship you have you are the owner and you have the responsibility to get fund for your business, and most of the options that available for you is from your friends or from your family or from the bank. Some of the banks, they don't give you a loan for to start a business. In partnership, there is availability of capital and credit. You can use the some funds from one of your partners in the business. One of the advantage also combined knowledge and skills, because in partnership we have, for example, 2 or 3 individuals who have different background and different skills and different knowledge, and they can combine all their knowledge to start the business of partnership. Okay, swift decision making. What we mean by swift decision making? Partnership can make decisions faster comparing to the corporation. Okay, but comparing to the sole proprietorships, are they faster in decision making process? I ask a question.
Yeah, they do.
Yes, it's faster.
If I want to compare between the decision-making process between sole proprietorship and the partnership, who's faster in decision-making?
The sole one.
The sole proprietors, faster. Okay, government regulation are few in partnership comparing to corporations, because most of the government regulations, the majority of the regulations of the government are related to the corporation, because they employ a large number of employees and they have greater business compared to the partnership. Some example of the partnership, sometimes 2 individuals who are, for example, specialized, one in management and one in accounting, they can open an accounting office, okay? And they would start a business as a partners. Now, what is the disadvantage of partnership? The first point here is unlimited liability. It is like sole proprietorship. The liability will be, the responsibility and liability will be on the partners to fulfill the demands and the financial demands of their business, okay? Responsible for each other's decision. You are responsible as a partner in a business. You are responsible for each decision that made in the business, whether you like it or not, okay? New agreement sometimes is needed if the partnership changes. For example, some of the owners or some of the partners die, or for example, some of the partners, they want to leave. He wants to leave from the business. You need to update the agreement and the articles of partnership, okay? Difficult to sell a partnership interest. It is difficult to sell the partnership. Why is it is difficult? Because there is no value for the partnership. The value of the partnership exists in the owners, okay? So if the owners wants to leave the business and quit from their business, there is no value for the business, okay? Distribution of profit sometimes might be uneven. The distribution of profit might not correctly reflect the amount of work done by each owner or each partners, because, for example, we have a limited partnership, and in limited partnership, the management is not shared between all the partners, okay? And the distribution of profit is not equal between the partners. It depends on the investment of each partner. Cannot find external funding as easily as large corporations. So this is the same problem, like the same disadvantage like sole proprietorship. Now, here we have the key to success in business partnership. What is the factors that we can that contribute to the success of the partnership businesses? First of all, keep profit sharing equitable based on the contribution of each partner. If you want to succeed as a partnership business, you need to keep the profit sharing equitable between all the partners according to the contribution, their contribution in the business. Partners should have different skills set or resources contribution to complete each other in the business. It is always يعني recommended for partnership businesses to have different skills among their owners. Ethics and compliance are required from all the partners in terms of being honest, toward all of them, and being honest with their customers as well and with clients. Must maintain effective communication skills, and most of the partnership they do face-to-face communication or phone, or they use emails, for example. Partners must maintain transparency with each other and the stakeholders as well. They must be open to each other, okay, and reveal any information about their businesses to each other. Partners also must be realistic in resource and financial management. Make a plan for the partnerships, and this plan should be matching their plan for the future, or their business in the future. Their plan should be matching with the capability and capacity they have in the business. Previous experience related to the business is quite helpful for the partner businesses. They could, for example, if they don't have experience, background experience in the field, they could get some advices about the business and how to, not how to start the partnership, but how to continue in their businesses. Maintain life balance and time spent on the business. They have to pay attention to a work-life balance, okay, in terms of managing their time between their family life and their work life. Partners must focus on customer satisfaction and product quality, which is the key success for partnership businesses. Also, they must maintain resources in line with the sales and growth. Okay, they must make to combine both optimism with realism in terms of conducting their business. They have, of course, they have expectations and they have some dreams for their businesses in the future, but they need to be realistic in terms of achieving those goals, the future for for their businesses. Okay. Now, the third type of forming businesses is corporation. What we mean by corporation? Corporation is a legal entity created by the state or by the government whose asset and liability are separated from its owners. And this is most important thing in corporation. Okay, corporation has many of rights and duties as well, and also powers of a person. For example, corporation can own and transfer property. Okay, corporation can enter into contract with some individual, or for example with other entity in the business. Corporation also can sue individual or other entity, and also they can be sued in the court. Okay. The majority of the businesses in USA, the account, most of the sales and income in the USA and in the economy of USA comes from corporation and big corporation. Who can give me an example of corporations, big corporations?
Sabic corporation.
Sabic, yeah. Who's the owner of Sabic?
I think it's the shareholders within a semi-government.
Yeah, semi-government, yeah. The government, and we have also public owners. We have public shares. Some of the public, they own shares in Sabic. We're going to talk about this, inshallah, later also. General Electrics, for example, Procter & Gamble, Sony, Samsung, all of these are corporations. And we can call, for example, Sony and Samsung as alien corporations, and we're going to talk about the types of corporation later. Now we have two terms here related to the corporation, which are stock and dividends. Corporations are typically owned by many individuals and organizations who own shares of the business, and these shares we call it stock. Okay, so we have here a definition of the stock. What we mean by stock: shares of the corporation that may be bought or sold by individual or maybe by other entity, and can also be gifted or inherited to your children, for example. Okay, these is stocks. Dividends, what we mean by dividends: the profit. It's a profit of the corporation that are distributed in the form of cash payment to all the stockholders. Okay, like for example, we have Aramco. Aramco distributed, for example, some of dividends just last month. Okay, now the types of corporation. We have 3 types of corporation here. The first one is domestic corporations. Okay, and it is the one that conducting business in the state in which it was or it is chartered or it is approval. Okay, for example, they given the right to start their business in Jeddah, for example. So this is a domestic corporations. Okay, another type of corporation, which is foreign corporation. It is the one that conducting business outside the state in which it is chartered. Okay, and I think these classification of corporations most related to USA. But here in Saudi Arabia, we don't say, for example, for some company that is already approved to start their business, the business in Riyadh, we don't call this as a foreign corporation. Okay, alien corporation. It is the one that conducting business outside the nation in which it is incorporated. Okay. Now, corporation could be private corporation and could be public corporation. Private corporations and initial public offering. What is a private corporation? Private corporation owned by just one or a few people who are closely involved in managing the business. They could be, for example, 2 or 3 persons from a family. They can start a corporation. Okay. None of their stock is sold to the public. So all the stock of the corporation are related to the individual who are related to each other. Okay. Private companies are not required to reveal or disclose any financial information publicly. And this is quite important for the private corporation. This is quite important in terms of the differentiation between private corporation and public corporation. In public corporation, the management or the board of directors, they need to reveal all the information related to their financial situation. But in private corporation, they are not, they don't have this, they are not required to reveal any information related to their financial situation. We have here the initial public offering, IPO. What we mean by initial public offering: selling a corporation stock on public markets for the first time. So some of the private corporation may offer, for example, stock to the public for selling. When they open their shares or their stocks for the public, it will become a public corporation. Okay. Usually, most of the private corporation, they would offer their stocks for the public because they want to expand or they want to raise additional capital, for example. Public corporation. Public corporations are those whose stock anyone could buy or sell or trade. Okay. And we have 2 types of public corporations here. We have the first type of public corporation, quasi-public, and we have non-profit public corporation. Quasi-public corporation owned and operated by the government and provide a service, but often operated at loss. Okay, like for example, شركة الكهرباء, electricity company, the national water company. Most of the quasi-public corporation are related to the government, okay, and operated by the government. Non-profit public corporation focuses on providing service rather than making a profit. They don't aim profit. They don't target any profit. Not owned by the government. For example, they owned by private people or private entity, like for example our university. Okay.
Yes, like our university.
Yeah, it's non-profit public corporation. Some of the charities, some of the institution in the society, they are non-profit organization or non-profit corporation, public corporation. Now, in corporation, usually we have a term which called board of directors. What is board of directors? What we mean by board of directors? So who are they? A group of individuals elected usually by the stockholder to oversee or to supervise the general operation of the corporation, who set the corporation long-range objectives, the long-term objectives. Usually the long-term objectives are established by the board of directors. Okay. Now, here we have some of the responsibility of the board of directors. Some of their responsibility is related to, for example, meeting the objectives on schedule. For example, they check or they review how they meet the objectives on basic, for example, on quarterly or annually or semi-annual, for example. Okay. They are legally liable for any mismanagement or misuse. They are responsible for any lack of management or any misuse of management in the corporation. Also, one of their important duty is hiring the corporate officers. For example, hiring the CEO, the president of the corporation. This responsibility is related to the board of directors. Now we have inside directors and we have outside directors. The members of the board of directors, they are either inside directors or outside directors. Inside directors are employed by the company. So they are a member of the corporation itself, and they are a member in the board of directors. Okay, we call it inside directors. And the other term, which is outside directors, we have people in the board of directors. They are not related or attached to the corporation. They only a member in the board of directors. Okay. For example, lawyers, some of the bankers, some consultant. Yeah, some consultant in the board of directors. Okay. Now, in corporation, we have two types of stocks. As we said before, I told you before, the corporation, we have a new term in corporation, which is called stocks. We have two types of stocks. We have preferred stocks and common stocks. What we mean by preferred stock? Preferred stock is a special type of stock whose owner don't have a say in running the company. They don't have a vote. They are not allowed to vote for any subject or any situation related to the business, okay, related to the corporation itself. But they have a claim to profit. They can claim for a profit before any other stockholders. We call it preferred stock, okay. احنا نسميها بالعربي اللي هي الأسهم الممتازة, okay. And the owners of this stock, they don't have a say in terms of running the company or running the corporation, but they claim the profit before any other stockholders. Okay. Now, the other type of stock, which is common stock, which is the usual one, okay, of stock. It is a stock whose owners have voting rights in the corporation, but they don't receive any special treatments regarding the dividends. So usually they receive their payment or their dividends after the owners of the preferred stock. Okay. And in the common stock, they have two privileges here. The first one, they can vote by proxy. What we mean by proxy here, or vote by proxy? You can, for example, if you are a common stock owner for some corporation, you can send somebody on behalf of you to do the voting. Okay. So allows stockholders to assign their voting privilege to someone else. Have primitive rights. What we mean by have primitive rights? They can buy any new shares that is, for example, released by the corporation before anyone else. They have the priority of buying those shares, okay? Now, as I told you before, preferred stock. The owner of preferred stock have first claim to profit. So the profit usually distributed first to the owners of preferred stock, and then second to the owner of the common stocks. Usually the dividends payment for the preferred stock owners, they are giving a fixed percentage of the initial issuing price, and this initial issuing price usually set or established by the board of directors. So here we have an example. If a share of preferred stock originally cost $100, for example, and the dividends rate was stated by the board of directors as 7.5%, then the dividend payment will be $7.50, okay? Per share, per year, okay? So the dividends usually are distributed annually. Some companies, some corporations, they distributed their dividends, for example, in a quarter base or semi-annual, for example, every 6 months. So it depends on the corporation, and it depends on the decision comes from the board of directors. Now, what is the advantage and disadvantage of the corporation? One of the advantage of corporation, it has a limited liability. So the company or the corporation assets is separated from the personal assets of their owners. So any financial obligations for the company or for the corporation, the owners of the corporation, they are not responsible, or their personal assets is protected, okay? Ease of transfer of ownership. It is easy to transfer the ownership in corporation. It has, corporation has perpetual life. What we mean by perpetual life? We mean that corporation could last for decades after the owners. But in sole proprietorships and partnership, usually they have a short period of time in terms of lasting business or continuing business, okay? One of the advantage also, securing funding is easier than for the other forms of business. It is easier for corporation to secure fund. They could ask or claim for raise additional capitals, for example, from the public, if they are a public corporation. Expansion potential. They have the potential to expand in the same country or even in another country, okay? Because the size of their businesses are bigger than partnership and sole proprietorship. What about the disadvantage of corporation? The first one, double taxation. And this is not applicable here in Saudi Arabia, but it is applicable in USA. What we mean by double taxation? Double taxation means the corporation is taxed for the first time as an income for the company, for the corporation, and the second time as an income for the owners or the stockholders. So the calculation of the taxes are conducted twice. The first time as the income for the company, and the second time as the income for the individuals or the stockholders of the company. Expensive to form. It is expensive to form corporation, okay? Disclosure of information to the government and the public. They need, in the corporation, the board of directors, as I told you before, they need to reveal their annual financial statement, for example. If they start a new business, they need to reveal any information related to the new business. If they have a contract or if they own a new business, they need to reveal this information to the public, okay? So here we have another disadvantage, which is the secret, the trade secrets of the company is not safe, because you need to reveal everything to the public. Owners and managers are not always the same and can have different goals. What do you mean by this? In terms, for example, if the employees of the company or if the employees of the corporation are not a stockholders or they are not owing any stock in the corporation they are working in, they wouldn't see how they fit with their companies or how they fit with the organization. This would affect their productivity and eventually would affect the productivity for the company and the profit of the company. Okay. Now, joint venture and S corporation. What do we mean by joint venture? Joint venture, it is a partnership established for specific project or for a limited time, for example. Like, for example, it's a sort of collaboration between two entities, and these entities could be a country and could be a corporation, to start only a new business or a new project. Okay. Control can be shared equally in the joint venture, or one partners may control the decision making. We have here an example, like I just read a couple of weeks ago, I read about Venezuela. Venezuela, they have a joint venture with Samsung to manufacture electronic devices for the country. This is a joint venture between a country and corporation. Okay. Usually, we use joint venture for a large investment, like, for example, developing a new product, or like, for example, natural resource extraction. If we want to extract natural resources, we could use joint venture with some companies or some corporation. Okay. S corporation. S corporation is a type of corporation that is taxed as a partnership. Okay. And according to the taxation here is according to the individual outcome. So in S corporation, we don't have double tax. Okay, we have only tax as a partnership. And we retain, in S corporation, we retain the limited liability benefit here. So the liability is limited. So the personal assets for the owner is protecting. Now, it is very popular, S corporation, very popular form of organization in USA, and we call it entrepreneurs. Okay. Now we have another type of forming a business, which is limited liability company. What we mean by limited liability company? It is a form of ownership that provides limited liability like corporation, and taxation like a partnership, but places fewer restriction on membership. Usually, most of the businesses, they prefer to form their businesses as a limited liability company because they want to protect their personal assets. The owner of limited liability company, they want to protect their personal assets. Some people, they use this type or this form to avoid personal lawsuits. For example, they don't want to put their personal assets at risk. Limited liability company considered a blend of the best characteristic of corporation, partnership, and sole proprietorship. It is some sort of forming a business that takes all the advantage in corporation, partnership, and also sole proprietorship. Another type of forming a business is cooperative, or we call it co-ops, and it is quite familiar, quite common, not here in KSA, but in some of the Western countries, like, for example, UK and USA. Co-ops organization composed of individuals or small businesses that have banded together to reap the benefit of belonging to a larger organization. Okay, and usually it is intended to operate with with a low profit, or even a profit that keep them to sustain for the future. Okay, I'm going to show you now a video about the co-ops in the UK.
Being an owner in a business, for example, gives people motivation and a stake in its success. But over the last 30 years, the number of people who have control over the businesses that shape our lives has become smaller, not larger. It's no surprise that when you ask them, people say they have no influence in their workplace, over businesses, and over the economy as a whole. Cooperatives, however, offer a solution. From the outside, they may look like any other business, but inside they are very different. They're owned and controlled together by the people closest to the business: employees, customers, residents, suppliers, not distant shareholders. They have an equal say in how the business is run, and they even decide what to do with the profits. And cooperatives work. There are nearly 7,000 independent co-ops in the UK. They're found in every sector, from high street retailers to farmer-controlled businesses, cooperative pubs and credit unions. Some of our most famous brands come from cooperatives, from champagne and parmesan to Lurpak butter and bird's eye peas. Even Barcelona Football Club is a co-op owned by its fans. Co-ops contribute £37 billion each year to the British economy and boost UK productivity, innovation and entrepreneurship. And they work for the 15 million members who together own the UK's co-ops. Cooperatives give people, in fact all of us, more control over the things that matter. What do you want to do together?
Is it clear?
Yes.
Okay. If we want to go back to the table that summarizes our session today. Just a second. Now, if we look at the table, as you can see here, we have the three main forms of corporate, the three main forms of businesses. We have the sole proprietorships and the partnership and corporation. The other type, like for example, S corporation and limited liability companies, they are considered under these three types, but it's not a main type. We don't consider S corporation or C corporation or limited liability companies as the main type of forming businesses. Okay, so in sole proprietorships, for example, the ownership is only one owner. In partnership, we have two or more owners. In corporation, any number of shareholders. Okay, and these numbers of shareholders could be the organization or could be individual. In S corporation, we have up to 100 shareholders. In limited liability companies, we have unlimited number of shareholders here. Taxation, in terms of the taxation, how these businesses are taxed. In the sole proprietorship, individual income tax, but this is not applicable, as I told you before, this is not applicable in Saudi Arabia. It is applicable in other countries that have personal income taxes law. Okay. In terms of the partnership, individual owners income tax. Okay. And in terms of the corporation, corporate and shareholders tax, so we have a double taxation here. Okay. and so on. The liability, which is most important, most of the businesses, most of the people, when they start their businesses, they are wondering about the liability because they don't want to have great responsibilities in terms of meeting the financial obligations. They want to protect their personal assets and their belonging, okay? So the liability, for example, in sole proprietorships, the liability is unlimited. The liability in partnership, somewhat limited. Why did we say, for example, here, why did we say somewhat limited? Because we have two types of partnership. We have general partnership and we have limited partnership, who has the limited liability, okay? In terms of the corporation, we have a limited liability, okay? So the assets of the corporation is separated from the owner's assets. The S corporation is also limited like corporation. The limited liability company also limited liability. What about the use? Owned by a single individual and easiest way to conduct a business. What about partnership? It is easy way for two individuals to conduct the business, okay? Corporation, legal entity with shareholders or stockholders, okay? S corporation, legal entity with tax advantage for restricted number of shareholders, and so on, okay? So this table summarizes the main topics in our session today. Any questions about how to form businesses or the type of forming businesses?
No, thank you, Doctor.
Okay. We'll finish our session today, but don't leave because I need to download the attendance list, okay?